Certainly, we've seen some volatility as prices have come down from the high levels that we experienced a couple of years ago. We had the drought here in the U.S., drought in South America at the same time. That reduced supply and led to higher prices. But as you know, one of the sayings in the market goes, the cure for high prices is high prices. When prices are high, that encourages more production, it encourages less consumption, and so that brings supply and demand back in balance. And obviously, the encouraging more production, a lot of that's up to the weather, and the weather seems to be cooperating very well this year. It looks like we're going to have a very good crop. Also, we've seen some reduction in demand from China due to some of the trade issues and softening of the global economy, I think, has led to a somewhat reduced demand as well. When prices decline, you do see a little more interest in hedging risk because when prices are high, you can absorb a little bit of volatility and still have some margin in your production. But so this year would have been a very good example of selling, hedging, selling futures in the spring and early summer before the prices declined as much as it has here once we see what the growing conditions have been. So hedging a portion of your crop earlier in the year when there's that risk premium in the market this year is a good example of how that's been a good practice.